Good afternoon, everyone, and welcome to today's Understanding the Border Operating Model webinar. This is the first of 10 webinars that the Export Department is doing on behalf of the East Midlands Growth Hub cluster. So if you haven't taken a look at some of the other ones that we're running, then please do so. Just to run through the agenda quickly, so we'll give you an overview of the EU Exit Support Programme that's been run on behalf of the Growth Hubs. It consists of one-to-one support in addition to the webinar programme. Talk a little bit about how we got here, a bit of history of Brexit and the key dates that have led us to this point and what that means moving forward. We'll take a very brief look at the trade agreement landscape before and after the 31st of December. So once we cease being able to take advantage of EU trade agreements that have been negotiated and are in place across the globe. And we're going to be looking at the government's border operating model in detail. So we're going to be looking at the implications for importers. Importers benefit from the fact that the government is introducing a phased approach to the implementation of border controls, but then also what it means for exporters, where they don't have that phased approach, and what are the immediate requirements that they're going to have to fulfill as of the 1st of January. And then we'll talk about the considerations for you guys, the business owners, and what you need to be doing over the course of the next 60 plus days to best prepare your business for the changes that are about to take place. There's also an action plan and signposting to available information and support, which is really quite useful. It covers what I'm covering in this presentation, but also more. So a little bit about the EU Exit Support Programme. So like I say, we've got a series of 10 topical webinars. The first few are very much Brexit related, or EU exit related, and will be taking place this side of Christmas. But then leading into next year, we've also got webinars that are kind of trying to build on the positive aspects and looking at, developing overseas markets by means of international contracts and managing financial risk and looking at international supply chains. So there's a lot of pre-Brexit stuff this side of Christmas, and then we look more into the generic international trade after Christmas. We've also got available up to 3 hours of dedicated one-to-one support. So whilst webinars are a great way of imparting generic data, there's nothing quite like sitting down with a specialist to go through what Brexit actually means for your organisation and how you can best prepare. So those 3 hours are split over 2 sessions, and in between those 2 sessions, we go away and pull together a targeted action plan and then go through that with you in the second session. So it's very much relating to your business and what you need to be doing to prepare optimally for the changes that take effect from the January the 1st. This is the link. So all of these webinars and one-to-one sessions are on Eventbrite. So please go ahead and book whatever's relevant to you. So how did we get here? It feels like I've lived and breathed Brexit for 4.5 years. I'm tired of it now. Yeah, it all started with the referendum in June 2016. We voted to leave. There was a whole hoo-ha that happened between then and basically January this year, when UK Parliament ratified the Withdrawal Agreement Act, and EU Parliament gave its consent a few days later. So we officially left the EU on the 31st of January this year, but to all intents and purposes, our trade of goods and services has remained the same throughout the transition period. The government had the opportunity to request an extension to the transition period, which would have given us longer to get our ducks in a row, if you like, but they missed that deadline deliberately and declined to request an extension to the transition period. So effectively, we are out of the EU because we left at the end of January, but the transition period that we've enjoyed for the last so many months, that will come to an end on the 31st of December this year. So what does that actually mean? What's the impact? We know that EU UK negotiations are down to the wire. There are some real sticking points around fisheries and state aid and level playing fields and so on. We don't know whether something's going to be pulled out the bag at the end of the day, but I think there is clarification now around changes that will take effect regardless of whether there is an EU-UK trade agreement, and businesses really can't afford to delay their preparation any longer. So I've just pulled together this table which basically describes what we've enjoyed throughout the transition period, the changes. So we're no longer represented in EU institutions, but we've continued to take advantage of the customs union and membership of the single market, which obviously has huge advantages for both our goods and services based companies. But then also looking at, once the transition period ends, if there isn't a deal in place, what does that actually mean? Technically, we become a third country in the eyes of the EU. Obviously, our access to the single market and customs union is withdrawn overnight. That takes away any use of free trade agreements that we may have benefited from over the last 40 years. EU law ceases to apply, and I think it's fair to say that the UK legal framework isn't where it ought to be in terms of grandfathering over legislation and putting in new legislation for compensate for EU legislation, no longer being applicable. But what we're going to talk about today is the impact of customs controls, which will then be implemented for EU trade. So we will be implementing customs controls for goods coming into the UK, or I'm going to make a differentiator between GB and Northern Ireland, and we'll come on to that in a little bit. But there are going to be customs controls for goods coming into the UK from Europe, and similarly, the remaining 27 member states will have customs controls in place for UK goods entering their territory as well. It's all, like I say, it's all very complex on the face of it, but we do have a lot more clarity than we did earlier in this year. We now have the new UK global trade tariff, which shows us what import duties are applicable to our goods when they come in from the EU. We can calculate what import duty is going to be applied to our goods when they go into local markets within Europe. We have the Northern Ireland Protocol, which shows how the flow of goods between GB and Northern Ireland will be impacted. And then we have probably the most clarity around customs controls is provided in the new border operating model, which we're going to discuss today. So there's a lot of clarity on which we can start to prepare, and hopefully some of that will become clearer as we go through. I just wanted to touch on this very, very quickly because I did mention trade agreements. So I love this image. It illustrates the current EU trading landscape and the different levels of agreement the bloc has with countries and other trading blocs. As part of the EU, and indeed this last year, so during the transition period, we've retained access to these agreements. But on the 1st of January, we'll no longer have access to what is over 77 countries with a variety of different negotiated agreements facilitating bilateral trade, so anything from customs union agreements to association and stabilization agreements to, FTAs and economic partnership agreements. There's lots of different ways in which the EU conducts bilateral trade, but we won't have access to those any longer. And we won't have access to the further 24 that are in the process of being ratified, or the 6 that are in the process of being negotiated. So where does this leave us in terms of our global trading landscape? Well, the UK was technically unable to negotiate new trade deals until the transition period. And even then, those agreements couldn't come into effect until after the transition period. So all of these that you see here don't actually come into force until the 1st of January. But so far, the government's agreed to 19 rollover deals, or what we refer to as continuity agreements, that cover in total some 50 countries. However, I suppose the concerning piece here for me is that those nations represent just 8% of our global trade. So failure to strike a deal with the EU will see more than 90% of our trade being done under WTO terms and most favoured nation tariffs, as you've probably heard referred to. So, like I say, it's just always good to kind of like give an overview of where we're coming from and where we're going to, at least in the global trading landscape. But this brings us on to the border operating model, which is effectively what you're all here to learn about. So in July, the government launched some 200 plus pages of a document called the Border Operating Model. And this lays out a phased approach to the implementation of border controls on exports from GB to the EU, and a phased approach to implementing these on imports coming from GB to the into GB from the EU. The phasing is largely due to the impact of COVID on businesses and their level of preparedness for the new trading agreements. And if I'm honest, I think there's a level of the government, you know, their focus has been deterred as well, so they haven't been prepared. As I said earlier, throughout the presentation, I refer to GB rather than UK at certain points throughout, because the Northern Ireland Protocol sees Northern Ireland remain closely aligned with the EU, and so the flow of goods between GB and Northern Ireland and the EU are treated somewhat differently. This is a huge, big and heavy document, so I'm just going to today pull out some salient points and what they mean for you guys as importers and exporters, and try to simplify it a little bit. And I think understanding these key points is paramount in terms of preparing for next year. So they're on the import side of things. So when we're talking about that phased approach, there are really 3 dates in that. So there's the 1st of January, and then there's dates to be determined in April and then July 2021. Changes to export processes and requirements will be effective from the 1st of January, so there really is little time to waste. There's no phasing in for this model at all. And the implications for importers and exporters are quite significant, especially those having exclusively traded within the EU, so not ever having had to operate in this way or consider border controls or declarations or so on. So essentially what does it mean? So once the border operating model comes into force, as an importer and or an exporter, you'll have to complete UK and EU customs declarations. So some locations will require pre-lodgement of customs declarations prior to the movement of goods, and this will particularly affect roll-on, roll-off movements, and the government has some plans in place for how this could be, the pain of this could be alleviated, and I'll come on to that later on in the presentation. With regard to customs duties, if you're importing, you'll now need to ensure that any customs duties applicable to your goods under the new UK global tariff are paid. So you'll need to determine the origin, classification, and customs value of your goods. We'll come on to it in a little bit, but there are options to defer any payment that's due up to a finite period. We'll come on to that in a bit. VAT will now be levied on imported goods from the EU, so following the same rates and structures that are applied to rest of the world imports. But obviously, if you've exclusively traded in the EU, you've not been exposed to this, so that can potentially have a cash flow impact. VAT registered importers, if you're VAT registered, you'll be able to use postponed VAT accounting, which is different to what we first thought going back a couple of years, when we thought the VAT was going to be payable at customs, and that would have, you know, before you could clear your goods, and that would have caused a number of, especially small businesses, terrible pain. If you're not VAT registered, you have the same options to report and pay import VAT as you do for your customs duties. Safety and security declarations are another change. So in order to maintain safety and security standards, the UK government will be collecting even more information on goods moving into GB from the EU. And essentially, this is just so they can get a picture on, you know, what's coming in and why. So this will, by default, mean that we have to obtain safety and security declarations. So it's absolutely paramount that you understand what documentation is needed to clear your goods at customs, whether that be licensing or certification and so on. Then there's within the document, there's a lot of focus on additional requirements, and these refer to changes that will affect only specific goods movements like foodstuffs, for example. They'll need special certification. They may need to enter the country via specific locations, and they'll undergo additional checks at the border. So some of these requirements will occur before the core import and export process, and some will occur after. But these elements are introduced in stages. So depending on the type of goods that are being moved, will depend on whether these new requirements are phased in from January, or phased in from April, or phased in from July. And the government separates out certain product categories that need these additional controls. So they're things like, and they're on slides as we go through the presentation, but it's things like goods covered by international conventions or commitments. It's goods subject to sanitary and phytosanitary controls, goods with additional customs requirements like excise goods, or it can be other goods including strategic exports. So these are the kind of controlled goods that the government is saying are going to need further requirements. And then it's bad news for those of you that are already collecting Intrastat data. So HMRC will continue to require that all VAT registered businesses currently required to submit monthly Intrastat arrival declarations. So, you know, where your imports are over a certain threshold, you'll still need to carry on submitting these from the 1st of January, and the same timelines currently that are currently required. So let's delve into a little bit more detail, and we're going to look at requirements for importing first. So as I mentioned, this is a phased approach, and there are clearly defined processes that all movements must follow from the 1st of January. And there are additional requirements that are applicable to a number of specified good categories, of which I just mentioned some of them. So requirements are split in the model between standard goods and controlled goods. So standard goods are anything from clothing through to electronics. Controlled goods would be, you know, those ones that require phytosanitary controls, excise, those kind of things. So as an importer of controlled goods, if any of you fall into that category, you'll have to submit a standard customs declaration from the 1st of January. Although you do have the option of using a simplified declaration procedure if you've obtained the authorization to do this, and I can share with you later how you go about doing that. You'll also have to comply with a specific customs process in place at the location you're using to move your goods, as well as ensuring you've got any licensing requirements and that they're adhered to. Border controls become more complex, so you really need to understand the route of your goods and what custom control systems are in place there. Again, if you're using a good intermediary, this should be information that's easy to obtain, and you know, good intermediaries, agents, freight forwarders are worth their weight in gold. If your goods are entering via a border location that doesn't have existing custom control systems, maybe they've been dealing with goods exclusively from the EU, and they don't have those control systems in place, you'll have up to the end of the next working day to notify HMRC that your goods have entered the country, which is a little bit of flexibility there. There's focus on groupage loads, obviously mixed consignments, so they will potentially be subject to individual inspections. So there'll be pressure on you as the importer or your intermediary to ensure that the relevant declarations, permissions, and where necessary paperwork is in place to ensure that groupage loads are not subject to delays or compliance action due to customs or other requirements not being met. So I think this is a theme running throughout. Our goods are going to be subject to so much more scrutiny when they leave the EU, and similarly EU goods coming in here, there's going to be so much more scrutiny that you know, documentation, permissions, and so on is so critical to prevent goods being you know, at best held up, worst seized. So we started off talking about controlled goods, but what about standard goods? So if you're an importer of standard goods, you'll have two options for submitting customs declarations. So you can use existing customs processes to complete a standard customs declaration at the point of entry into GB, or you can use deferred declarations. And deferred declarations is where you keep records of the imported goods internally within your company, but you can defer the declaration to HMRC for up to 6 months from the point of import. So you're having to account for that import duty because it's going to be payable at some point, but you don't have to make the full declaration, so therefore that import duty isn't payable until the declaration is made. Now, for this option, either you or your intermediary or agent acting on your behalf must be authorised to use what we call simplified declarations and must have a duty deferment account set up. If you're acting on your own behalf, you must have a good compliance history to qualify for simplified declarations and obtain a duty deferment account. So a poor compliance record will mean that you won't be able to defer declarations, and you'll have to submit a standard customs declaration like importers of controlled goods from the 1st of January, and that means that your duty and import VAT will be payable immediately upon making that declaration. In the absence of a UK-EU trade deal, all goods coming in from GB to the EU will be subject to import duty, and that's, as I said earlier, according to the new UK global tariff. So this duty is payable when the declaration is made, so immediately in the case of controlled goods imports, unless they're using simplified procedures, or on standard goods when not deferring those declarations via a simplified procedure. As well as duty, import VAT, as I said earlier, also becomes applicable to goods entering the UK from the EU. You can defer this, so along with import duty, it's also possible to defer your import VAT. If you're deferring your customs declarations, you must use postponed VAT accounting and account for the VAT using your quarterly VAT return. So this will involve you estimating the import VAT due on your imported goods, but then being prepared to adjust a later VAT return to reflect the actual import duty once the declaration is made. Just going to check something there. No, we're fine. If you choose not to defer, if you're VAT registered and either not eligible or you choose not to defer your declarations, you can account for import VAT using postponed VAT accounting, or you can simply pay it at the time of submitting the import declaration. So if you're not, similarly, if you're not VAT registered and you're not deferring your customs declarations, your VAT liability will be due upon submission of the import declaration. So you've got some options with regard to deferring duty and deferring and accounting for VAT, which is all aimed at helping resolve cash flow issues, essentially. So we need to familiarise ourselves with what is applicable to your business and what you're entitled to taking advantage of. As I said earlier, Intrastat arrival declarations, if you're a VAT registered business and your imports are exceeding the threshold of 1.5 million, you'll be currently making Intrastat submissions. So you have to continue doing so regardless of whether you're deferring your customs declarations or making them at the point of import. That's led to a number of clients groaning quite loudly who thought that might be going at the same time as everything else. There are a number of facilitations that are available to you as an importer from the 1st of January, and these are essentially designed to help kind of reduce the impact of burdensome import processes. So if I touch on just a few, so you've got transit. So if your goods are coming into the new UK customs territory under the Common Transit Convention, or CTC, we love our acronyms in international trade, the government has introduced the new Goods Vehicle Movement Service, or GVMS. And this sees hauliers submitting their transit movement reference numbers electronically before checking into the port of departure. And what that means is that data is able to be assessed while they're doing the crossing to the UK, and a decision is made immediately as to whether your goods are cleared or whether they need to be checked before the vehicle arrives at the port of entry. So just an attempt to speed things up, if you like. You'll also be able to end a transit movement at your premises rather than at a government office or destination. Now, to do this, you need to become registered as an authorised consignee and have an authorised temporary storage facility. But it's just another way of trying to streamline the process so that your goods aren't held up, and it's trying to remove some of the burdensome requirements around import. You'll also be able to use or to apply to use simplified declarations for imports. And again, these are designed to reduce the process requirements at the border and essentially speed up the movement of your goods. So again, either you or your intermediary, and I can't stress enough the importance while we're getting to grips with these new changes, if you do have a good customs intermediary, then you know, take advantage of their knowledge and their experience. But always remember that the kind of the buck stops with you. So you need to have this knowledge in order to give them the correct instructions, because if you don't give them the right instructions and they follow your instructions to the word, then any misrepresentation or mistakes on that customs declaration are down to you essentially, and they can turn out to be quite costly. Sorry, going back to the simplified declarations for imports. So again, either you or your intermediary has to be authorised to use the simplified declaration process. But the options under this facilitation are what we call an EIDR, which is an entry in declarant's records. And this is where you're not required to declare the goods to customs using HMRC's customs like Chief or CDS. You don't have to declare the goods via these systems upon import, but instead you can record it in your internal commercial records. So that's one way. But then there's also simplified frontier declarations, and these reduce the amount of data submitted upon import and then allow you to submit a supplementary declaration at a later date. So it's a way of speeding up the flow of goods, but it's a way of easing organisations into this new way of working as well. Another facilitation is temporary storage. So that could be open to you from the 1st of January. This is designed to increase storage capacity for imported goods. So facilities that, for example, at the moment aren't part of an existing inventory linked community will be able to temporarily operate without an inventory linked system in place till the 1st of July. So it's kind of the government's way of trying to increase capacity for storage, at least for the first 6 months as we ease into this new way of working. Similarly, the government's also going to be issuing what we call temporary customs approvals to rail and airport operators that don't presently have this status. That gives these types of locations up to 6 months to attain full border force approvals, but means that they can operate to boost capacity and speed up the flow of goods from the 1st of January in the meantime. Duty deferment accounts we've touched on, but again, these are classed as a facilitation. So HMRC are introducing new rules that will allow most businesses to use a duty deferment account without needing to obtain a customs comprehensive guarantee, which has been really off-putting to businesses in the past. So a duty deferment account could look a lot more attractive to businesses now. Again, it's not open to businesses that have a history of non-compliance or at risk of insolvency. And then finally, just to touch on it briefly, authorised economic operator status. This is a kind of, you'll have seen it around, some of your freight forwarders are probably badged with it. They've put their businesses through the mill to get this accreditation, but it's a kind of quality or kite mark that demonstrates a company has the relevant customs control procedures that meet both EU and UK standards. And there are a number of benefits attached to having this status, not least its impact on the amount of duty that can be deferred. So it's worth looking at. The process of obtaining it is not so dissimilar to obtaining ISO 9000. So it's quite in depth and can be quite costly in terms of, you know, assigning resource to it internally. But it'd be quite good to understand whether the benefits that it offers would be relevant to your organisation. So what can you do to prepare at this stage? So for the 1st of January, one of the first things is ensure you've got your GB EORI number. You should have, because I think HMRC blanket bombed everybody last year when we were looking at a no deal. Check the commodity codes for your product. I can't stress this enough. These are needed to make your customs declaration, and they're imperative in the calculation of duties on an import. So it's essential that you're using the correct commodity codes. The UK trade tariff is an organic system, so new commodity codes are coming out all of the time. You can subscribe to updates, so you can make sure that any new commodity codes that are applicable to your business, you're instantly using once they become available. You need to familiarise yourself with the process of customs valuation for your goods. We're going to be doing a separate webinar on this, but customs valuation, this is needed to make a customs declaration and calculate duties on an import. And the rules for valuation are based on the WTO valuation agreement, so they don't change from the 1st of January, but whereby they've not been applicable to companies importing goods from the EU before, they will do now. So you need to understand how to do a customs valuation for your goods so that HMRC can determine the duty and import VAT that's applicable. Consider applying for any available simplifications or facilitations, and we'll come on to the simplifications in a bit. Things like deferring customs declarations for standard goods. Think about how you can use the facilitations to ease yourself into this new mode of working and reduce the impact on cash flow if that's a concern that you have. If you're importing standard goods, so like I said before, electronics through to clothing, and you're not going to defer your customs declarations, you're going to make customs declarations from the 1st of January, then start to either source a customs intermediary or obtain training and obtain a chief badge. Chief is the core HMRC system, and training on how to use it and having the chief badge will enable you to make the declarations yourself. But again, it's a personal decision, but I would certainly look to employ the services of an intermediary at least to ease you into this process. I mentioned earlier that requirements from the 1st of January, there'll be specific requirements for certain category of goods. So these goods will have additional import controls placed upon them. So the goods that we're talking about fall into these 4 categories, and the additional controls can be quite extensive, and it's important to understand which ones are relevant from the 1st of January, then April, then July. But this can involve having to obtain export and import permits, obtain import and export licenses. It can involve import pre-notifications, where you have to give advance notice to the relevant regulatory body of a consignment's arrival into GB. It can be obtaining specific sanitary and phytosanitary controls, specific certification like health certificates, catch certificates. It involves more checks in terms of documentary, identity and physical checks, and it can and will eventually mean your goods being routed through designated ports or points of entry like a border inspection post. Where processes aren't adhered to, so where the correct documentation, certification, licensing isn't obtained, then you stand the risk that your goods can be detained or they can even be seized. So it's absolutely imperative that you understand what documentation is required, and you can find this all against your commodity code and the UK trade tariff. So that lists exactly what is applicable to your product in order to clear customs. And these are really complex processes, and I would advise that if you're dealing in any one of these products, then please just book a one-to-one session where we can go through the exact requirements and what you need to do to make sure that you're prepared. A one-to-one session would be the best route there. And then we move on to the next phase. So April will see the introduction of additional requirements for some goods again. Primarily those goods subject to sanitary and phytosanitary controls. And again, I've listed these here. And these would again involve the requirement for things like import pre-notifications, health certification, as I mentioned, export health certificate, phytosanitary certificate. They'll be subject to more documentary, identity and physical checks at the border or inland, although inland is a temporary arrangement until all goods can be pushed through border inspection posts. As I said, bringing on to the next point, so border control posts from July 2021, that's where all of those goods will be routed through. Again, really complex process, so a one-to-one session would allow us to explore further in relation to your specific situation, so you can go away with a targeted action plan that applies to your goods and your specific requirements. So then moving on to the final phase for imports. So July sees the end of the phasing in period, and this means that all importers will be complying with full border control requirements. So by this time, either you or your intermediary will have to complete customs import declaration using either CHIEF or CDS, which are, as I mentioned earlier, the two HMRC systems. By this time, you'll be paying duty and import VAT on all EU goods, unless there's an FTA reached, which may reduce the duty burden on some qualifying goods, or you might be using a facilitation to reduce, suspend, or eliminate duty. And again, that will depend on your commodity code and what you're able to get authorization for. You will still be able to make simplified customs declarations or entry into your business records up front. And as I said earlier, that means you can follow up with a supplementary declaration up to 4 weeks later. So it's kind of reducing a little bit of the burden. Goods coming into the EU will be subject to one of two customs processes upon import, and this will depend on the point of entry into GB. So it's really not only interesting, but it's actually important that you understand the route of your goods. So border locations from July can use either what we call a temporary storage model, where goods can be stored for up to 90 days before being declared to customs, or the location can use the newly developed pre-lodgement model using the new GVMS service that I referred to earlier. This is a likely process alternative for ports that don't have space or the infrastructure to operate temporary storage. There's those two processes open to border locations from July. As a VAT registered business, you'll still be able to continue accounting for your import VAT on your quarterly VAT returns. Duty deferment accounts will still be available to you if you qualify, so you'll be able to defer import VAT until import duties are until a prescribed date, and delay your payment for an average of 30 days. So essentially you can get 30 days credit using a deferment account. Safety and security declarations, they'll be required for all applicable goods. So meaning that customs receive pre-arrival note information in the form of summary declarations. You'll have access to a number of customs special procedures, which I mentioned earlier, and they're really designed to either suspend or reduce or claim relief on the payment of duties, customs duties and VAT under specified conditions. So things that I would mention there would be customs warehousing, for example, which allows for goods not in free circulation to be stored without payment of customs duty. And that excise duty, customs duty, import VAT isn't payable until those goods are released from the customs warehouse into free circulation. So that's a simplified procedure. Inward processing is another one you might have heard of, which allows for the payment of customs duty and import VAT to be suspended on imported goods while processing is taking place. So you might have brought goods in from the EU to repair or conduct some kind of processing on them, and that import duty is suspended because they know that those goods are going to be going back out. Temporary admission is another one you might have heard of, that allows for businesses and individuals who are established outside of the UK to be authorised to import goods with either total or partial release from customs duties and other charges because of the specific use to which the goods will be put. So that could be temporary admission for a trade show or something like that. There's a good few of them, and I can signpost you to a number of them. Again, a one-to-one would be a perfect example to explore what your particular requirements are, and then we can advise on the best simplified procedure that you can apply for. Now I want to move on to exporting, because there's no phasing in model. So it means that you have to get organised pretty quickly as everything comes into effect on the 1st of January. So as a UK-based business sending goods from the UK, you'll have to complete your UK customs export declaration from the 1st of January. So to be able to do this, you're going to need your GB URI number. You're going to need your commodity code of your goods. you're going to need access to HMRC systems either directly or via your agent or intermediary. And then you're going to need to have an understanding of the trade tool to determine whether a license is needed to move the goods and whether the goods are covered by additional duties and so on. Similar to imports, there are simplified declaration procedures that exist to enable faster clearance at the border by making a simplified customs declaration or an entry in your commercial records up front and then following up with a supplementary declaration 4 weeks later. So it's quite similar to import. Between January and June, so before the core model comes into place on the first, well, around the 1st of July, if your goods are moving via locations that don't have existing customs arrive declaration, or don't have existing customs controls, then an arrive declaration has to be submitted before the goods have left your premises. But then from July 21, only goods moving by specific locations can submit an arrive declaration. So it's important that you understand what you're going to be entitled to do from January, and then how things change when the core model comes into place for good. Where you do submit an arrive declaration, then you'll receive a permission to progress or a specific routing if your goods need to be checked. So that there's very firm processes and process flows that are followed here. If your goods are subject to safety and security declarations, then your carrier will have legal responsibility to ensure that UK Customs receive pre-arrival or pre-departure information here. So where you haven't yet made an export declaration pre-departure, a standalone exit summary might be needed, and then your goods can be subject to checks for prohibited and restricted items at the port of departure. So it's important that you understand the flow and the requirements if your goods fall under the category of needing safety and security declarations. Similar to import, transit is also a facilitation for exporters, albeit kind of the other way around. So as a UK exporter, taking advantage of this facilitation means that some customs processes can be done away from the border. So it kind of speeds things up. What else? Other available facilitations, I suppose, would be the ability to make a single export declaration that effectively combines customs and safety security data before your goods are exported. And you can do this via HMRC's National Export System, or NES, without the need of an agent or commercial software. There are a few more, but again, we could cover those in a one-to-one perhaps a little bit more effectively. And finally, remember I mentioned earlier about roll-on, roll-off freight. So the government's developing a new technology known as the Smart Freight Service, or SFS. I love these acronyms. And it's specifically for roll-on, roll-off freight industry. So it's designed to ensure that HGV drivers are carrying and able to present the correct documentation for EU member state border controls. So by doing this, they're able to limit the risk of drivers being stopped, which is probably the best case scenario, but then they can be fined or they can be sent back to the UK, which could lead to massive queues and delays on the roads approaching ports in the UK, which we envisage we're going to see a little bit of that anyway. So that is the Smart Freight Service, and specifically for roll-on, roll-off. And I think government will announce further details of that as they become clearer. Again, just like imports, there are a number of product categories that require those additional controls, checks and documentation. So if you are exporting one or more of these products that I've listed, then it would be best to book a one-to-one so we can explore your specific requirements in more detail. But we really want to move on to what we can do to prepare. So how can we best prepare ourselves for the changes that are coming in? So there really, like I said, there really is a lot more clarity than there was. I'm going to run through a few of these. So your EORI number. So an EORI number, it's required for all businesses moving goods into or out of GB, including those deferring their import declarations. I believe in the additional support at the back, I've provided a link to apply for an EORI number if you don't have one. It can take up to a week to get one and takes about 5 to 10 minutes to apply. So as I said earlier, VAT registered businesses with EU trade were previously enrolled with an EORI number, but you should check whether you already have the number before applying, if you like. So double check whether you've got one. If you don't have one, then you need to apply. I hope I've stressed the importance of a good customs intermediary and the support that they can offer. Customs declarations are complicated. The majority of businesses that currently trade outside the EU will use an intermediary, such as a customs agent or fast parcel operator, freight forwarder, broker, so on. They're there to help you meet these requirements. A good one is worth its weight in gold, but as I did say earlier, never forget that however good they are, mistakes can be made, and ultimately the buck stops with you, the trader, in terms of the accuracy of declarations and your compliance with regulation. We talked a bit about the duty deferment account. If you import goods regularly, you may well benefit from having a DDA, because this enables you to defer customs charges, including duty, excise duty, import VAT, to be paid once a month through direct debit instead of being paid on individual consignments. So that's a real advantage if you qualify for one of those. So obviously there's a benefit in getting signed up for one for the initial 6 months of next year, because you can defer any import duty and VAT if you're importing standard goods. You can defer that duty and so on until July. But even following on from that, if you have a high number of consignments coming through, being able to just pay or settle up with HMRC once a month rather than per consignment is a real advantage. The other one is the VAT. So VAT is happening, import VAT is happening. If you're a VAT registered trader, you'll be able to account for your import VAT on your VAT using your import VAT on your postponed VAT accounting. But if you're not VAT registered or you're not using postponed VAT accounting, you'll need to report and pay import VAT through the normal customs procedure. But again, you can use a duty deferment account even if you're not VAT registered, so that's something to look at. We've touched a little bit on transit and simplified procedures, so take a look at the facilitations that are available. See if you can use a simplified procedure. When you make, for example, when you make a customs declaration on import, you might be able to make a simplified declaration and suspend duties and taxes when your goods arrive at a UK or EU port or airport. There are a number of them. I've mentioned inward processing, there's outward processing, authorised use, temporary admission, storage facilitation such as customs warehousing. So there's quite a lot there. Familiarise yourself with them and understand whether you can take advantage of them. The other thing that I find myself, I am a trainer for the Institute of Export, and my poor delegates that attend my training are sick of hearing me bang on about checking commodity codes, but it's so important. Our goods are going to be subject to increased scrutiny and checks, and the correct classification of your goods is your legal responsibility. So they're required for all customs declarations. They dictate internal taxes and duties. They dictate whether a proof of origin is required. They feed into trade statistics. They determine whether the goods need any certification or licensing. They feed into valuation monitoring. Everything hangs off the commodity code. So it is absolutely essential that you start to sample check your commodity codes. If you have a few, check all of them, because wrong codes can result in incorrect payment of duty, incorrect filing of paperwork, or failure to obtain the correct supporting documentation, which can lead to delays, confiscation of goods, and penalties, which can be both civil and custodial. So checking commodity codes is paramount. I did mention earlier you can subscribe to updates. If you're in doubt, so when you're looking at your commodity codes and you think, maybe that one's not what it should be, you can email the Tariff Classification Service, and I've given details at the back on the supporting documentation. You can consult them, and they, explain your goods, and they'll give you a non-legally binding advice on classifying those goods. If you're looking for more assurance, then you can apply for what's called a binding tariff information, whereby you explain the nature of your goods, what they're used for. HMRC will probably ask for some samples, but then they will assign a commodity code to your goods, and that's a binding agreement for 3 years. So you have absolute peace of mind that the commodity code you're using is the correct one. The other thing I wanted to touch on is product origin. So take a look at your products in accordance with the WTO origin rules. So to validate the existing origin or determine the new origin of goods, and I say the new origin of goods because the UK manufacturers or producers are going to need to demonstrate that their goods are either wholly obtained or sufficiently transformed to be of UK origin. And why is this important? Because up until now, UK and EU content has counted towards the rules of origin requirements in EU trade agreements. So raw materials sourced from the EU and processing done in the UK all counted towards a finished product being of EU origin. So it becomes a little bit more complicated when we can no longer class EU raw materials or EU components as part of our origin, if you like. There's a very straightforward way of doing it. Again, it's dictated by the WTO, so that it looks at things like the last, we call it last, so the very last place that the process took place, substantial, so whether the processing done is of a reasonable level. It looks at the economic side, so the processing involved should add value to the finished product. So raw materials can't exist 50% of the ex-works price of a product, for example. And then the process, the product should undergo a level of manufacture or processing that effectively transforms the combined materials to that of the finished product, and that will result in a change of tariff heading or a change of commodity code. So there's very straightforward ways of determining the origin of your goods. Customs value of goods, we talked before and I explained there's going to be a separate webinar on this because it is quite a complex area. You need to gain an understanding of how your goods are valued for duty and import VAT. So customs valuation will need to be completed on all imported goods to determine what we call the ad valorem duty as per the WTO valuation agreement. So just to take a moment to explain, I suppose ad valorem duty is the duty and import VAT that you'll pay based on the value of your imported goods. And it's quite complicated, but there's 6 valuation methods in total, but 90% of the world's trade uses method 1, and that's referred to as the transactional value. But this value is based on a number of additional costs being added to your seller's invoice. So it's not just straightforward what price is actually on the commercial invoice that they issue you. There are additional costs that need to be factored in order to get to the transactional value. And so HMRC can determine the duty and the import VAT applicable. So it's important to familiarise yourself with this process, and hopefully it'll become clearer with the webinar that we're going to be doing. Import duties and taxes, familiarise yourself with the conditions attached to your commodity codes in the UK trade tariff, and again, the new UK global tariff, and we're doing another webinar on that as well, so we can look at that in a little bit more detail. Regulation is key. Familiarise yourself with any regulatory impacts to your sector or products that are likely to come into play. Now, probably the best protocol for this is talking to federations and associations that have been monitoring this for the last 4.5 years and have been lobbying government. So they would be a first port of checking. Look at controls, certification and licensing. So understand the procedures in place for your product. So do they require an import pre-notification? Do they have to enter via a border control post? Do they require documentary identity physical checks at border? Understand what the requirement is, and this is all hanging off your commodity code. So familiarise yourself with the commodity code and all of the conditions attached. Export pricing, so going back to our exporters, consult the governments, where would you like to export to? And again, the link is provided at the end. And the EU market access database is a really good source of information to understand how local market duties and taxes will impact your pricing competitiveness once the UK becomes a third country and the access to those EU trade agreements is removed. So they're the 2 systems where you would determine what duty and taxes are applicable to your goods when they enter the local market. I mentioned registered consignor. If you trade in excise goods or you want to use excise duty suspension, you'll need to apply to become a registered consignor, or alternatively seek the services of your agent who already has that approval. Commercial contracts, you need to start looking at your commercial contracts to understand what your obligations are with regard to transport and delivery. and look to negotiate where Incoterms are too burdensome and you bear too much risk. So there's another webinar on Incoterms and international contracts, but essentially most EU trade is done via ex-works or DDP, and both of those Incoterms put excessive burden on either the seller or the buyer. And that's fine when we're dealing with free circulation of goods and there's no customs controls and border checks and so on. But now that there is, if you're supplying your goods delivered duty paid to your clients in the EU, that will require you not only to make an export declaration in the UK, you'll then have to make an import declaration in the local market and clear the goods. So you're responsible for clearing the goods in the local market, and you're responsible for the import duty and taxes. So again, there's another webinar on that, but it's just start looking at your commercial contracts if you haven't done so already, and see whether there's any opportunity to negotiate with your suppliers or clients. They're not going to want anything that's too burdensome for them either, so it's a good dialogue to have. Currency and exchange rate. So look at hedging as a means of reducing the impact of further sterling volatility. You know, we saw it back in 2016. It's been volatile ever since. Having currency hedging and so on can help protect your cash flow. And there are several different options there. I won't go into them just now because we are running short on time. But the other thing I wanted to stress was accessing training. So even when you've appointed an agent to manage your imports or your exports, as I said earlier, it remains the business, i.e. you, who's responsible for correctly declaring the goods. And negligible liability is paid on the agent. The only time an agent will accept 50% liability is when the two companies are linked in some way. So maybe sister companies, one is responsible for the logistics and the other one is a manufacturer, for example. Typically, they bear negligible liability. So with this in mind, understanding customs obligations and taking steps to ensure you're compliant is essential if you want to avoid issues like that are linked to non-compliance. So, you know, supply chain delays due to increased inspections, or the withdrawal or refusal of certain benefits like customs simplifications and duty relief, they can be withdrawn. You can obtain customs civil penalties and financial penalties, so demands issued for non-payment of duties and taxes. So you've declared the wrong import duty based on having the wrong commodity code, then you know you have to back pay all of the missing import duty, and there can be a penalty stuck on top of that. Now, when I mentioned training, I also wanted to mention HMRC grant funding as well. So obviously training comes at a cost, but the government put aside just middle part of this year a further £50 million for eligible organisations to be able to apply for things like recruitment or employee training or IT systems in preparation for additional customs declarations. So if you find yourself in a position where this is all new to you and you're having to hire someone, invest in IT, or put your employees through training, then there's grant funding available to assist with that. And I think the limit is something like $2,250 per employee. So it's well worth looking into. And I provided a link as basically the supplementary support and advice. And really, I've kind of scooted through some of this. I'm just looking if we have any questions and answers. No, we don't for the moment. So I've just provided an action plan here that covers some of the things that we've talked about. And then the sources of information, there is a lot. There really, really is a lot. It should give you everywhere and everything you need to look at, not just for this this webinar, but also future webinars as well. There's some 3 pages here. Obviously, the export department's there. If we scoot back to the beginning part of the presentation, I would urge you all, if you're in any doubt as to how prepared you are, or you think you've got particular requirements that you'd like to discuss in detail, and you'd like to have us to go away and research and come back with definitive actions or definitive decisions, then please book a one-to-one with us. But failing that, you can see all of the webinars that are coming up over the course of the coming weeks. And then the only thing to mention is if you are if you want to get in touch with me directly and discuss your specific concerns, then I have put my contact details up there. But if there are no question, I get concerned when there's no questions and answers. It means I've either lost you all or I've just done a good job of explaining what's going on. So you've got my contact details. If there's anything after this webinar that you think, oh, actually, I want to check that, then by all means do get in touch. But failing that, I will hopefully either see you on a one-to-one or on a future webinar. So thank you so much for your time, everyone, and enjoy the rest of your afternoon. Okay, take care. Bye-bye.